Hello and welcome. Hello and welcome. My name's Ari Page, and I am excited to be presenting today how to get up to $250,000 in zero interest business credit. Now, this is a very special presentation because there's a lot of business owners out there right now that are struggling to build their businesses. They're struggling with the current economy, with the inflation, with just the overall dynamics of how the current economy is. So today what we're going to do is we're going to bust past a lot of the barriers that are stopping people from getting access to growth capital, and we're going to be talking about all things capital today. So we're going to be starting with why business credit is really the best form of funding available today. There's so many different forms of business and corporate funding, but why is business credit the best? We're going to get into that. So part of that is quickly acquiring $250,000 or more of zero interest capital. So what exactly is that? We're going to show you what these business credit cards are, what unsecured means, how it's safe for you. All of that is going to be covered in that section. Then we're going to also talk about how to negotiate and maximize approvals. What does that mean for you? When we're applying and when you're applying and getting business credit cards that you can access as cash, you want to be able to negotiate those approvals. You want to be able to bump up those limits. We're going to show you how to do that. Additionally, we're going to go over how to form a lendable business entity, why that's so important for the funding process, and also top reasons you're getting denied. Now, all of this is part of our proven strategies that we've been doing for quite some time at Fund&Grow in order to help boost people's scores and actually get them up to $250,000. So this is what we do all day long. We're funding people's businesses. You can connect with us. This is our team. This is us standing in front of our building. And we've been at this for a while. We've been doing this since 2007. That's over 15 years we've been building business credit. And we've generated over $1.4 billion of funding in that period of time for 30,000 entrepreneurs. And what that's done is that's earned us over 5,000 five-star ratings, over 5,000 five-star ratings. You can see that on Google and on many of the other rating services. And we also have an A+ rating with the Better Business Bureau, and we have about 60 team members, as you can see. We've actually been on the Inc. 5000 list for every year for the past 7 years. Now, why am I saying this? I'm saying this so that you can understand that we actually have the knowledge and know-how to be able to tell you about funding, to be able to teach you about funding, and to be able to help you move your business forward. Now, if you're on the webinar today, you probably fall into one of these three categories. You're either starting a business, you already have a business, but you've been funding it yourself, or you are already operating a business that's generating cash, but you need access to more funding to expand. So I'm not sure if you're number 1, 2, or 3, but you can come to the questions area and you can let us know which category you fall into. Because 82% of small businesses fail simply due to lack of funding. That's shocking. That's absolutely shocking. There's just so many forms of funding out there, and they're so difficult to access that 82% of businesses fail due to lack of funding. That's really what's holding back most businesses. But you come to the questions area and let us know what's holding you back. So one of the problems in my past was that I didn't use this form of funding. So as I was trying to grow Fund&Grow, I had to actually implement and utilize this same exact funding that we're talking about today. So this form of funding, you can get up to $250,000, which is obviously a decent chunk, and you can do that at 0% interest. Now, how can you do that? Well, all of the business credit cards offer a 0% introductory rate for a period of time. Could be 6 months, could be as long as 24 months. And you can quickly Google 0% business credit cards and just verify that what I'm saying is right. Now the question is, how do you get approved for the highest amounts of that? How do you get 250,000 of it? And how do you get it so that it doesn't appear on your personal credit report? If it doesn't appear on your personal credit report, it's a business card. So it's not going to appear on your personal credit report. By using this form of credit, you get access to earn rewards and cash back and travel miles. In other words, if you're doing daily spending on your business, you're already spending for your phone system, your electric bill, for your pay-per-click, maybe your advertising, all of that, you're already spending. Spend it on one of these business credit cards because they're going to give you cash back, they're going to give you airline reward miles, they're going to earn all types of rewards so in other words, you're going to get money back for the normal spending that you're doing. Instead of just spending money, you can get 1.5% cash back. That's huge. So one of the really important aspects of this type of funding is that it's unsecured. So unsecured means that it's not secured against one of your assets. So your assets can never be taken away. That is super huge. So unsecured means it's safe. They don't use your collateral and they don't use your assets. And the final point is that no tax returns or income verification are required for this type of funding. Now, are we recommending that people get into this and and lie about their income? Of course not. Absolutely not. That's not what we're saying. We're just simply saying that you don't have to go through a litany of documents and paperwork in order to get approved for it. And it's a wonderful form of funding to get access to. So let's take a quick look at some of the more commonly used forms of funding. So for example, we have hard money. So hard money is one of the forms of funding that gets used a lot. Now, as you can see, with hard money, at a 12% interest rate and a 3% origination fee, you're talking $37,000 on $250,000. And of course, you can run your numbers any way you want. Go up to $500,000. You'll be looking at over $60,000. Now, when you use business credit, unsecured business credit cards, and when you have all the tools that you need, which we provide, and we'll show you, we're even going to go over on this call today, how you can use a business credit card in conjunction with a payment service, and you can literally wire transfer the money directly to your closing when you're buying real estate. You can do it directly off your business credit card, wire the money, and you're paying $4,000 to Fund&Grow to get access to the $250,000. So this is, when you're using business credit, you're using what's called simple interest. Simple interest. So simple interest is when it's not being compounded on an annual basis. So hard money loans, way too expensive. Let's talk about mortgages for a moment. So mortgages are a compounded interest. So let's say that you're borrowing $100,000. You're borrowing $100,000 at 5% interest. That's $5,000 per year of interest on $100,000. And so when you look at that, the bank is trying to get all $5,000 every year within the year because they're compounding it annually. So they want all $5,000, all of that interest, not over the life of the 30 years of the mortgage loan, but in that 1 year. That's the whole compounded annually part. So a mortgage is compounded annually. So if you're getting $100,000 at 5%, you're going to pay that $5,000 in the first year. So they take that $5,000, they divide it by 12, whatever that is, like $400 some a month, and that is your payment just to service the interest. So obviously they're going to add on a little cushion, $400, $500, $600. So your payment on a $100,000 mortgage could easily be $600 with only $400 of that. With only $200 of that actually going to the principal, meaning that your $100,000 gets paid down so little that the interest every year ends up eating up the majority of the payment. So compounded interest is absolutely crazy. You do not want to use a mortgage loan that's compounded interest. You do not want to use hard money loans. They're super expensive. But when you're using business credit, you're using simple interest. When you make a payment, it's all going directly towards the balance, and that's super important. Now, there's a lot of people that think that this isn't going to work for them, where they may not have the credit they want, or they may not have the credit partners they want, or they may not have the business model they want, or they may not have all of the business services set up for them yet. But don't let your life suffer because you have not moved forward yet. If you live in America, you have access to credit, you can get access to this type of funding. Even if you have bad credit, you can work through that, you can fix your credit. This type of funding does not appear on your personal credit, but they do want to know that you have good personal credit before before approving you for it. Now, I don't care what what your issue that you have going on is. The worst is that you have bad credit or that you have heavy debt. Both of those things are issues that you can fix. You want to start to move your personal debt over to the business side so that you're not straddled with personal debt. Once you move it over to the business side, if a lot of small businesses, they've been using their personal credit and investing into their business. And so now they have a lot of personal debt. So if you move the personal debt over to the business side where it belongs, suddenly your personal scores start to go up again and you become lendable again. There's just a variety of ways to make you lendable. That's what we do. So let's go over the first thing. We talked about on the emails, we told you that we're going to talk about entity structuring and how that impacts funding. And there's 3 main points that are absolutely crucial when it comes to getting funding from the banks. And the first thing is that you are in an industry that is safe. So if I'm coming from a for example, like I'm in the investment industry, and so I'm an investor, and I come with my investment LLC to the banks. The banks are going to maybe see that as risky. There's been times where real estate was viewed as risky, although right now it is not being viewed as risky at all. So you have to look at what industry, and this changes. You have to take the pulse of what's going on in the banking industry. And so what we do is we help our clients come to the banks within a lendable industry, within an industry that's going to get approved. So point number 2, the name of the entity. I can't use something like Ari's Risky Investment Club, you know what I mean? Because it sounds risky. Now, obviously, I'm being hyperbole by using the word risky in there, but the long and short of it is the name of the company can either give confidence to the lender or they can drag confidence. They can take away confidence. So you have to have a strong, powerful name that doesn't indicate anything risky or anything questionable. Seasoning. Seasoning is how long your entity has been open. And so the seasoning is very important. You need to have at least 2 years of seasoning. You might ask, well, how do I do that if I don't have an entity set up already? How do I get the seasoning? We do not recommend shelf corps. We do not recommend buying an entity that's been sat on the shelf to use for funding. In fact, it's actually illegal to use it in conjunction with funding unless you disclose that you just bought it. And then that kind of defeats the whole purpose of buying a shelf corp. And so a shelf corp is a corp that someone has bought and they've set on the shelf, so to speak, and they've let it accrue seasoning. So in other words, year after year after year after year, now let's say they've let it accrue seasoning for 10 years, now it's a 10-year-old seasoned company. But we don't recommend using those. There's ways that simply through using a sole proprietor, you can get access to use your length of industry experience. So if you've been a real estate investor, or if you've been doing any type of investing, you've been doing anything outside of your professional job in terms of investing, and like even if it's just even if you're just doing it on the side, it's like a side thing that you're doing and you're not professional. It's not like this is not your main gig. You can go, if you've been doing that type of amateur real estate investing or amateur whatever it is that you're doing, you can go and get a sole proprietor and use your length of industry experience. So when you set up a sole proprietor, they ask, well, how long have you been doing this real estate? And you say, well, I didn't have an LLC, I didn't have an S Corp, I didn't have an entity set up, but I've been doing it for 5 years. And they go, and they put 5 years down, and now you have a sole proprietor that says 5 years. You can take that to the bank, 5 years. Why? Because your years of industry experience cannot be discounted. And so when you set up a sole proprietor, you're able to take your years of industry experience, and that becomes the amount of time the entity was set up. So an LLC, you can't do that. An S Corp, you can't do that. A C Corp, you can't do that. It has to be set up for that period of time. A sole proprietor, you can. And so if you don't have an entity that has the length of seasoning, you can always set up as a sole proprietor only for banking purposes to go to the bank. I'm not saying that you would use that sole proprietor if you're going to earn income, if you're going to use that as your operating entity. So, for example, Fund&Grow is an LLC. We use Fund&Grow LLC when interacting with our employees, when interacting with our clients. And so if Fund&Grow were to go to the bank, Fund&Grow could set up a separate entity specifically for business management that's going to manage our investments that we use to get the funding. And so if someone needs to, they can always set up a separate entity to help their operating entity. Okay, me personally, I own many different entities, some entities for managing other ones. And so this is a common practice, and this is something that you're going to want to employ if you want to get access to the larger amounts of funding. So that's utilizing multiple entities. So, and then of course, funds can be lent in between entities. So if I use my funding entity, then I would set up a note agreement between my funding entity and the entity that my main operating entity that actually needs to use the funding. That way, everything is completely above board and 100% legal. So let's talk just for a minute about how to build up to the large amounts of funding, because this is what we do at Fund&Grow. We love building up to the larger amounts. As you can see on your screen, we are depicting anecdotally here the examples of what clients get. So you can see Bank of America, American Express, and so this is what clients are getting. And the way that we do this is through using major banks' 0% introductory offers. The question is, how do you get approved for these larger accounts? How do you get the higher limits? And then how do you access the cash? How do you use that without paying all these different nickel and dime fees? So this is one of the things that we do at Fund&Grow. And the reason why I keep telling you that this is what we do at Fund&Grow is because throughout this presentation, as I'm explaining to you what we do here, I understand that I'm actually also applying for a job. I'm applying for a job with you guys. I'm showing you that perhaps we might be the people to get you the large amounts of funding. And so in no way am I bragging by us getting these large amounts of credit. In no way am I trying to be braggadocious or saying that we're so great. What I'm doing is I'm actually applying for a job. So I just need you to know that we do have the bona fides and the credentials to be able to do this, that we're doing it all the time. So one of the things that we're doing is we're extending the 0% offers. That's part of the card stacking process, where we have an offer that's 0% for 12 months. So all of the banks, they offer a Visa and a MasterCard. So Bank of America, we can get their Visa card, their Visa business card, 12 months. Let's say we get a client $25,000. So it's 0% for 12 months. Well, on month 11, we already have the Visa card from Bank of America, the business card. Now we apply for the MasterCard from Bank of America, the business card. So there's a Visa Business Master, a Visa Business Bank of America, and a MasterCard Bank of America. And so what we'll do is we'll apply for that second card on like month 11. And where the 0% is about to expire in 30 days. And then when we get approved for the second card, then, and even if they only approve us for 10,000 or 20,000, even if it's not more than the original one, what we do is we merge those two accounts together. So now instead of the client having the MasterCard and the Visa again from Bank of America, they just have the MasterCard because we've merged them together. Now there's a higher limit and we merge it into the new account. We merge it into the 0% account. That's the brand new one, the one that we just got set up. That's how we extend the 0%. We take an old account where the 0% is expiring, and it's a Visa. Then at the same banking institution, we apply for the MasterCard. We get approved for that. We merge them together. Now the 0% is over the entire account. No one else is doing this. They don't know how to do it. This is all completely legal. The banks actually love us because we're bringing to them great credit users that greatly respect their credit. Our clients greatly respect their credit. They understand the asset of their credit and how that can get them all these huge amounts of business funding. So this is the whole card stacking process in a nutshell. So this is how we funded 30,000 businesses. So first of all, with what we do, when a client's onboarded, we create a customized funding plan, which is part of our one-on-one consultation. And then within that, we are creating action steps to move the client forward. Some of the action steps are for the client. There's a few things we need the client to do. Most of the action steps are for us. We're the ones who actually do the work. We move things forward, and we actually take the client into funding, and we do the process over and over. So if you take a look, you can see that clients come into the process. We look at their credit profile and lendability. Then we do our application process along with our negotiations, and we're going to get more into this. What are the negotiations? That's huge. The negotiations are key. Then the client is able to utilize their funding, and then we're back to applying again. And then we just repeat the whole process over again, because that's how it works. We're just applying and we're building. That's the card stacking process. And if you're wondering if we're full of it, just take a look. You'll see that we have literally thousands and thousands of reviews all across the internet. We've been doing card stacking for a very long period of time. This is something that many businesses are utilizing. Here's an actual example of what you'll see. So this is an actual example. So here we have a client who we took for a card stacking batch, and you can see that we took them for 4 accounts. So an American Express, Bank of America, Chase, and Sandy Spring banks. So they happen to have a corporation structure. Now I don't have anything for pertinent to the client on here, so I'm not giving away any of my clients' info. We cut off their name and all of their info off of this screenshot. So we're not giving away any personal info. But what we are going to show you is that when we first applied for the client, you can see on this column here, this is the initial call. This is when we first applied. So when we first applied for the American Express card, we got $25,000. That's because we positioned the client really well. And then we weren't able to negotiate any higher, so that was the final amount. And then for Bank of America, when we applied, they only gave us $10,000, and we weren't able to negotiate that one any higher. And then for Chase, we got $33,000. And, or I'm sorry, we actually first, I apologize, we actually first got declined. They said no. And then our negotiators called in, spoke to the underwriter, explained the client's business and what the client does, and we got approved for $33,000. Same thing on Sandy Springs. It was declined. We got 0, and then we got it for $25,000. So this client got a total of $93,000 on this one batch alone. So one funding batch, one card stacking batch, they got 93,000. Here's a client that's gone through 2 card stacking batches. So this client's received 150,000. Now remember, everyone's credit is in a slightly different place. So some clients are going to receive a lot on one batch, some are going to receive few. Like this client received a little bit less on his first batch than he did on his second. And so this is a common thing. You're not going to always receive the same amount. You could receive a lot more, you could receive a lot less. Sometimes it has to do with what's going on with the economy. As you guys can see, the economy is not always, in the best places. Sometimes it's up, sometimes it's down, and the banks are taking the pulse of that, and they're determining, how much funding and lending to do each quarter. So working with a company like us is going to maximize that, but also remember there's still an ebb and flow with credit in general. So let's talk just for a few minutes about your personal credit. And I'm going to talk about your personal credit because your personal credit ties into business credit, but the credit we get you does not appear or show up on your personal credit report. And that's really important to understand. So real quick, I want to show you what you see on your screen right now is what you would see at the top of a credit report. This right here is what you would call the score printout. So you get to see the credit score from this particular client on all 3 of their bureaus. So on Equifax at a 782, on TransUnion a 790, on Experian a 766, a 767. And you can see these different codes, like code 30 is universal across the bureaus. And code 5, too many inquiries with accounts, too many accounts with balances. You can see that's universal across all 3 of these different scoring modules. Now, the reason I bring this up is because it's really important when you are going to get credit, you need to know what are the banks thinking about you? What do they see? And so when you work with us, we're going to actually look at what the banks are looking at. We're going to look at an actual weighted scoring module that's going to tell us in detail what's going on your report. To us, all these codes make a big difference. They make sense to us. And let me explain. So on your screen, I've just brought up a consumer credit report. So a consumer credit report is a lot different than a bank level credit report. A consumer credit report only gives you a snapshot. They only give you a 24-month payment history. They don't even show you anything from before the 24 months. So if you have an account that was open for 6 or 7 years, they only show you the last 24 months of that. And I don't know if you guys know, but that's on all consumer credit. And as you can see here, we only have access to a small amount. Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 fields, 13 fields along with the seasoning. So the reason why I'm showing you all this is that they're only giving you a small snapshot. They're only giving you a small piece of the picture. I'm going to show you why, and I'm going to break this down. So what you see on your screen now is a bank level credit report. Now I know that we're moving through a lot of information, folks, so I'm going to try to slow it down. But what you see on your screen here is a bank level credit report. And as you can see, it goes from left-hand side to the right-hand side, and we have all of these different accounts. Okay, so all of these are different trade lines on this person's credit report, and we've removed all their sensitive information. So all of these are accounts, and you can see below here are the closed accounts. Now, there's a reason why I'm bringing this up, and I want to explain to you how the banks are manipulating your credit score in order to make it easier for them to give you less credit, lower amounts, where really what they want to do is they want to be able to pick and choose who they give the credit to. And they do that in such a way where if they can kind of hurt everyone's credit score, it makes it easier for them to say, oh, we'll approve you, but not you. When in reality, a lot of people qualify. So what we're going to talk about is why you might have good credit, but you're still not qualifying for all the funding that you're trying to get access to. And remember, the funding that we're talking about doesn't appear on your personal credit, but they do want to look at your personal credit. So let's go over a few things. Let's start first with the date opened situation. So on a bank level credit report, there's 2 columns that they use to determine the seasoning of any given trade line. So of any of these accounts here, there's two different columns they use. They use this month reviewed column. So this is one of the columns that they use. And then they also use the date open column. So here is the other column that they use when determining when your trade line or when that particular account was opened. Now, why do they have two? And by the way, I can't go over everything on the credit report, but I'm just going to show you guys a couple things. And so why do they have two different columns for this? Because one of these columns shows up on your consumer report. One of them shows up on this report, and the other one doesn't. Do you guys understand what that means? That means that one of these accounts or one of these columns you guys will see, and you'll be able to see that when your account was opened, it was opened on such and such date. The other one, they can manipulate and change. Now, why do they have this other field? They have this other field in here because they want to be able to manipulate the seasoning on your accounts. Why? I couldn't tell you exactly why. All I can tell you is that it seems to be something that helps them. So let me give you a very exact example of that. So here we have an American Express account that was open on 10/15. So 2015, October of 2015. And so when you look at the months reviewed field, it says 1. So you have 1 month in the reviewed field when this should say something like 80 months or 60 months. There should be like a 60 in here. And so when they're calculating this client's seasoning, how long his account's been opening, they're seeing a 1. But it's been open since 2015. How is that even possible? Because the client doesn't get to see this column. The client doesn't see any of this. All they see, all they see is one column. And that is, let's see, the date open. This column right here. That's the only one that they see. So let's say that this client got smart and he said, hey, my seasoning is messed up. He would call and he would try to get this part updated because he doesn't even know about this part. The client doesn't even know about that. So they would call and they would try to get this updated with the bank. They would be spinning their wheels because updating this does not update your actual seasoning. Are you guys following this? Come and leave a comment if you're following this and if this is making sense for you guys so far. So that's one of the tricks that they play when it comes to seasoning. They have separate columns. They don't show you one of the columns on your consumer report. And they can manipulate that column. And just if you're wondering if that's a big deal, look at this. Length of credit history is 15% of your total credit report. That is really, really important that they do not mess with that. So now let's look at something else. Let's look at the high credit limits. So when you have a credit card, if I have a $10,000 credit card on my personal credit, I can only use 35% of that credit card without bringing my credit score down. So if I have a $10,000 card, I can't put more than $3,500 on that card because $3,500 is 35%. So this is 35% of 10,000. So 35% is 3,500. If I go over 3,500, my credit scores start to go down. Folks, that's why we use business credit. When we use business credit, it's not going to pull your scores down because it doesn't show up on your credit report. Isn't that beautiful? So if it doesn't show up on your credit report, then you're able to use the entire amount of the account without your scores coming down. This is how we do the card stacking process. It's business credit. Your personal scores stay high. As you're applying for the business credit, all that reports to the EIN of your business. It doesn't even show up on your personal. So when I have a $10,000 credit limit, that means I can only spend $3,500 if it's a personal card. Now let's look at this account here. Let's take a look at this Chase card. All right, this Chase account right here, under the high credit limit, under where the limit shows up, you see here? You see all these limits? Well, look here. Under this one, there's no limit. Why is there no limit? They call this the no limit card. They call it the no limit card because they specifically didn't put a limit in it. The American Express, they call theirs the open card. They call it the open card because they don't put a limit in it. Chase calls theirs the fair and flexible card. Fair and flexible card? There's nothing fair about it. Let me tell you why. This client here it says 0 in the limit field, but yet under the balance, what does he have? $552. So this client is now $552 over the limit. See, there's a balance with no limit. The computer, it's out, it just pulls a number, 552, limit, 0, 552 over limit. The client is wondering, why is it saying that there's too many balances? You remember this, guys? Why are all these codes coming up? It doesn't make sense. Look, he's got 780, 790, 767. Why does he have those bad codes coming up? Well, because there's no limit showing up, and so it looks like he's $552 over the limit. So what do we do in a situation like this, folks? What we do is we have a limit imposed. We need to have a limit of, like, for example, on this account, I believe it was a 25,000 limit. This client, inside Chase's system, they had a soft limit. So this is the way these fair and flexible and no limit and open cards work. What they do is they give you a soft limit. So he had a soft limit of 20K, and that was, or 25K, and that was within Chase's system. So if he logged in on his phone, he would see $25,000 available, but on his credit report, it didn't report the 25 because it's a no limit card. And they don't report the limit, so that when you put a single dollar on the card, you're now over limit. They do it on purpose. That's just another one of the ways that the banks want to manipulate your score. You can't use these types of cards, folks. We have clients that come to us all the time with the no limit cards, with the open cards, with the fair and flexible cards, and the other banks call them something different. And you notice how they're so disingenuous, fair and flexible. There's nothing fair or flexible about it. Really what it does is it takes away your flexibility. Now you have less options to apply, and it's completely unfair because they're not even telling you that they're doing all this in the background. So I could go over 1,000 things, folks. Like on this particular client, this client didn't even realize that they had a balance on a closed account. See down here, they had $2,500 on a $5,000 account. That's something important to know. And there's a lot of husbands and wives that don't realize that they're an authorized user. Do you see this over here? They're an authorized user on their client's or on their spouse's account. And now they're double carrying the debt. You don't want to double carry the debt. If you have a credit card and your wife has a credit card and you guys are both using the credit card, there's no reason to carry it on both reports. Even if they're an account holder, if they're an authorized user, there's no reason to have it show up on both reports, especially not when you can be using a business credit card. So I could go over this for even longer. There are just so many things to go over on the credit report. This is, excuse me, one of the things that at Fund&Grow takes time for our account managers and representatives to be able to go over your report. So there is specific principles that we use that allow us to build up to this type of credit, or this amount of credit. And that is by building a solid foundation. It really matters the positioning of your credit. And that's why that's why we're going over your personal credit. We're not building personal credit. We're building business credit. But it's predicated on your personal credit. And so they want to look at your personal credit before granting you business credit that reports to your EIN. Now, these are the things that will hold people back if they don't do it properly. So the debt to limit ratio. If you have a personal card, this 35% is going to hold you back. If this is a business card, you don't even have that. The 35% doesn't even count. So what we want to do is we want to make sure that all of your personal credit cards are below 35% when we apply. So if you have a $10,000 card, we want to make sure that the balance is at least $3,500 or less. Ideally, just pay it off. But if you need to, pay it down to just 35%, and then we can move forward and apply. Another thing that we're going to do before we apply for you, if you have other accounts on your report, such as these other accounts here, 20,000, 12,000, 8,000, we're going to call and we're going to try to increase those personal limits. What if we could boost each one of those accounts before we even apply? Now you have an even rosier, an even better, an even more rock solid profile. We want to make your credit profile absolutely, astounding. We want to make it go through the roof to make it really easy to apply and get you business credit. So that's one of the reasons that we do that. Now, another thing that we'll do is we'll take similar accounts and we'll merge them together. Let me see if there's any examples of this on. No, I don't see any examples of it here, but, well, actually, I do. here we have a Citi card here, and we have a Citi card here. These accounts can actually many times be merged together. So instead of having an $8,000 limit and a $20,000 limit, you now would have a $28,000 limit. So you now have less overall accounts, and the accounts that you do have a higher limit. Because you went from 2 accounts to one account, and that one account now has a higher limit than it did before. And let's see, which account was open the longest? So this one was open in 12 of 20. So this was open in 2020. This was open in 2015. What our company would do is we would merge it into the account that's been open the longest. Now we retain the longest seasoning, we have a higher credit limit, and we have less overall accounts. You know how many codes we just killed from this? We just killed so many codes to be able to bring that client's credit scores up. So merging accounts together, it's a very important one. You want to merge similar accounts together if they are from the same institution. That way you have less overall accounts and you have higher limits on those accounts, and you want to merge it into the account that has the longest seasoning. And then of course, planning for hard inquiries, because when you apply, that creates a hard inquiry. Now, hard inquiries that come from a business application can successfully be disputed and removed legally, because a business inquiry needs to count against your business, not against your personal credit. So business inquiries, an inquiry that comes from applying for a business card, can legally be disputed and removed. And so we show you guys how to do that. And of course, if you have any negative credit items on your report, you want to get those removed by disputing those and removing those. If anybody needs help with that, we're going to talk a little bit more about that further down in the presentation. So let's talk about inquiry removal. That's one of the keys to getting access to funding. So on the top part of your screen, you can see there's a client here that has 4 inquiries. So this is 4 inquiries. Let's see, 1, 2, 3, 4 inquiries. And all of these, you had 2 from 2022 and 2 from 2021. This client here is A-OK, and they can move forward. So this client does not have so many inquiries that they can't move forward. 4 inquiries is going to be okay. But now if you look at this client down here, this is a no-go. Look how many inquiries this client has in a very short period of time. This would be something that you see Experian Business Credit, Cabbage. You have, if this was a business loan, there is some business inquiries that could be removed off of this particular report. So you always want to make sure that you're positioning properly before you apply. You don't want to walk uphill with a broken leg. You want to apply after you've fixed the report, not before, because otherwise you're just telling the bank that you've screwed up. You want to fix the report, then apply, and then they don't see the errors, and all they see is the good stuff, and you're able to then talk to the bank and explain to the underwriter your business model, and then they're more likely to approve you. It's absolutely astounding just to know that simply by calling the underwriters and talking to them, that brings so much credibility to the application, just by calling and speaking to them. So many people apply and they never follow up and they never talk. Have you ever been in line at a grocery store or at a department store and they ask you, would you like to apply for our credit card? We'll give you 20% off. And then maybe you applied and you got declined, or you applied and you got approved for whatever, but you didn't know why. You didn't know why you were declined or why you got approved for whatever you got approved for, and you certainly never called anyone to ask for a higher limit or to overturn the denial. That's most people's story. Most people, when they apply, that's that. They just apply, whatever it is that the decision is that. That's not what we do at all. When we apply, many times we're expecting to be declined. We're going to call in. We're going to overturn that. We're 100% confident that we're going to overturn that. So all of that applies to business funding. So let's go ahead and switch gears for a second, guys, and let's talk about corporate funding. So we have business funding that we've talked about. Business funding is 0 interest. It comes from the major lenders like we've talked about, like Bank of America. It's the 0% business cards. It does not report your personal credit, and it's completely done for you, okay? That's what we've talked about so far on the call. Now, let's switch gears for a minute. We're going to talk about corporate funding. So corporate funding is non-recourse. So this is a really exciting form of funding, because corporate funding is something that would never come back on you personally, ever in a million years. It's completely 100% in your business's name. For example, these are 2 buildings that I bought using corporate credit. They're not in my name. They're my buildings, but they're not in my name. I didn't have to personally guarantee it off of my personal credit. If the worst should happen and I don't pay on the loans, guess what happens? It goes against the business, not against Ari. It doesn't go against me personally. So it actually goes against the business. So using non-recourse funding and using corporate credit is a really great way of being able to add more funding than the $250K that you can get with the business funding. So you can get $250K with up to $250K with the business credit cards, but with the corporate funding, you can easily add on another $100K just at places like Lowe's, Home Depot, Amazon, these places. If you run an actual office, you're gonna want to order things from Quill and Uline. If you're flipping homes or you have to buy materials for rehabs, you're gonna want access to Lowe's and Home Depot or Amazon. And so this type of funding is it's limitedly helpful until you get to the larger number. So this 100,000 is not that great. But what happens when you can start buying buildings like this? You know, this building here was $1 million building. So did I get that right? So this building here is $1 million building. This building here was a $450,000 building. And so when you look at that and you're able to buy that on corporate credit instead of on a regular mortgage, instead of on like a normal personal business, or I'm sorry, a normal personal mortgage that's against me, if I'm able to get that 100% in my business's name, if the worst should happen and I'm unable to pay it back, at least I don't lose my businesses. Now what happens, because some businesses, they're buying vehicles. They're buying vehicles with the corporate credit. So if you should have the worst thing happen where you're unable to pay on the item, at least they're not going to come and take the item away. That's really important to know, guys. So when you're using something that's unsecured, they're not going to come and take away your asset if the worst happens and you're unable to pay, which isn't good. It's definitely not good. So all right, guys, so we just a little interlude here to take a breather. I want to talk to you for a moment about something that we've been doing at Fund&Grow, which is monitoring people's credit. So it's really important to pay attention to your credit, to know where your credit is at all times. If you don't know where your credit is, you're not going to be able to move forward and apply for things like business credit. You're not going to even be able to move forward and apply for things like an auto loan or sign for your kid or to buy a new house, or especially not for the people on the call that are looking for business funding. It's so important to have access to your credit report at all times. So Fund&Grow now has our own credit monitoring, and that is at fundandgrowcreditservices.com. So if you don't know where your credit is at and you're wondering, is my credit in a lendability range to be able to move forward on Fund&Grow, you can go to fundandgrowcreditservices.com. And it's literally the cheapest of all the monitoring services. If anyone can find one cheaper, come and let us know. Seriously, $16 a month, all 3 bureaus, real-time credit alerts, unlimited access. So go ahead and check out fundandgrowcreditservices.com if you need access to be able to check out what your credit is before moving forward on Fund&Grow or whatever. I mean, you should have access to your credit report at all times. Now, I talked earlier about why it's better to use a business credit card to purchase things that your business uses day to day, week to week, month to month, rather than using your own cash. Why would you use your own cash or your bank account to pay for things that you can pay for with a business credit line that's going to earn you cash back and rewards? Look at this. I'm getting these types of rewards on a monthly basis just from the purchasing that we're doing. So here we go, $5,600, $5,600, $4,800, and here's other ones from a personal credit card I have, USAA. You know, this is just, why would you not use a credit card to purchase your things? Like if you could pay for your electric bill on your credit card, put it on your credit card. Now you get 1.5% cash back. Why would you not? Why would you not put every single possible bill and possible thing that you have on a credit card just so that you can get 1.5 cash back? If there was another way of getting 1.5 cash back for every single thing that you're purchasing, wouldn't you do it? Of course you would. So getting access to funding also allows you to get money back. And we have a lot of different people out there that are talking about Fund&Grow, a lot of different people that are utilizing this type of credit card stacking to help their clients. So we work with major places like NerdWallet, NerdWallet is literally sending over hundreds and hundreds of people a day that need access to funding. People are going on there and they're comparing, and they compare all the services, and Fund&Grow pops up as the #1 in business funding, in zero interest business funding that's unsecured. And so we have a lot of real estate speakers. We have like Clayton Morris and Ross Hamilton and Matt Andrews of the Family Mastermind, who are constantly telling the other gurus and the other teachers about us, so that they can teach us, they can teach how Fund&Grow works to their students. So these guys they're not, I mean, a lot of them are using Fund&Grow, but the more important thing is they're talking about it to their students. They're telling their students how to get access to funding without giving up your kid, without having to, give up your family home, or do a home equity line, or do Shark Tank funding and literally give up equity within your company. Imagine giving up equity within your company just to get access to funding. So we don't recommend that at all. We recommend that you stay in the driver's seat of your own business, that you use your own funding ability and get up to $250,000 so that you can move forward and fund yourself. There's absolutely no reason to give up equity within your company, or to use expensive Shark Tank funding, or to use these other hard money loans or angel investing and all of that, which just ends up being insanely expensive. And it's like exciting. They have an app for it, right? It's exciting. And it's not that exciting when you're paying 30, 40, 50% interest rates, guys. Merchant factoring and these other things are absolutely crazy. When you can get access to 0% funding that's from major institutions like Bank of America, Chase, American Express, these are major institutions, guys. These are not mom and pop, small, weird, one-off loans. These are 0% business credit cards that can be spent on anything, and I'm still going to get into how to access the cash directly without paying a cash advance fee, so that you can bypass the cash advance fee. Now, there's still a small fee you have to pay for that, but you want to be able to bypass the cash advance fee. So I'm going to show you how you can use the $250,000 to wire transfer the money directly into a real estate escrow account, and how you can purchase real estate directly. So with the program, what you're going to get access to is the $250,000 of funding. And that is through our coaching. That is through us creating all of these items on the list for you. We're going to work with you with your lendable entity, as we talked about. We're going to show you how to utilize the credit like cash. I'm still going to get into that as we go further through the presentation. The credit coaching package is us doing the work for you. And then the corporate credit, we talked about that. Now, I do have 2 bonuses for everybody who gets started with us today. And the first bonus is to get access to our premium coaching program for free for the first month. Now, our premium coaching, we're sharing with our viewers how we built Fund&Grow to where it is today. How did Fund&Grow get to the point where Fund&Grow is doing many millions of dollars of sales every month? Where Fund&Grow is producing $26 million in funding every single month, and going up from that. How do we run our customer service? How do we retain clients? How do we do our marketing? How do we set up a Black Friday special? All of these different things we talk about in our premium coaching. Our premium coaching is to help you grow. The funding is the fuel to the fire, and then the coaching is to really help your business grow. So then we also have a partner upgrade. Now what this is essentially a buy one, get one for today only. So these 2 bonuses are for today only, and I want to thank everyone who's still on the call with us. Today you can get started for as little as $1,266. So 3 payments of $1,266. So again, this is 3 payments, but you can get started with payment number 1, $1,266. You get instant access to the entire program. If you want to pay the full price, it's $32.97 one payment. So this is your best price. So you pay this is your best price. If you do 3 payments at $1,266, obviously you're paying a bit of a financing fee. It's going to be more than the $32.97. Now you get everything that we've spoken about on the call so far. The 12 months of Done For You membership is how you build up to the $250,000 in 0% funding. We do that for you. The secondary applicant membership upgrade, this right here is the buy one, get one. We're going to let you do, instead of buying 2 memberships, you can just buy 1 membership and get access to 2. So you can bring a credit partner. You could split the program with your with your business partner. If you know another business that wants to get access to funding, you could split it with them. So there's a lot of different things that people do. Sometimes a husband and wife combo will work together. You can add whoever you want as your secondary applicant, and we will even work with you to help you find who that perfect secondary is. So we're also going to help you with the $100,000 of the corporate credit, which is non-recourse, and the first 15 are going to get access to all of these bonus items. And of course, our service is 100% tax deductible. So this is Fund and Grow. This is what we do. You see a picture of us. This is me right here in the middle. So, yep, that's us, and we're looking good. I know we got we've actually grown quite a bit since this picture. So this picture, this isn't all of us. We're about 65 team members now. I just want to remind everyone that we have a A+ rating with the credit with the Better Business Bureau. We have over 5,000 4-star reviews. We've generated $1.4 billion for 30,000 entrepreneurs since we got started doing this 15 years ago in 2007. And this is one of the things that we are super, super passionate about doing, is getting folks access to funding. In October, we generated $26 million in funding. Our projection for November, for this month, is that we're going to either hit 26 and maybe 26 and a half. And so year to date, this year so far, we've generated around $220 million in funding. And so all of that has been pumped into the small business community here in America, and we're super excited and happy to be helping the small business community of America. It's been so difficult for small businesses over the last few years, and what we want to do is we want to help give you the leg up instead of the punch down that businesses have kind of gotten over the last couple years. So we've reduced our price, $700 off. It's cheaper than it's ever been before. Go to fundingspecial.com in order to get the $700 off. So again, it's www.fundingspecial.com. Now, these prices are not going to stay this low for long. So you get this price today, and then the price goes up. So today is Black Friday, and we're making sure that we bring an amazing offer to the small business community, and we want to get you approved. This is something that we're doing all day long. Our team got $26 million in funding last month, and we want to get you approved. Here's an example of a client. This is the letter they got from Bank of America, where it shows you have $37,500 of available credit. Most of the time, the client receives the email before they even get the credit card with the approval in the mail. So they've already received an email, or they've already received a letter stating that they were approved even before they've got the credit card. So here, this client got approved for $25,000, and this is what we're doing all day long. As I stated earlier, we're negotiating, we're applying, we're appealing, we're pushing the limits higher and higher, and we have lots and lots and lots of great proof of how good of a job we do. We really care about our clients. We care about the amount of funding that we're generating. We care about the affiliate partners that we work with. The affiliate partners that we work with are talking to their clients about real estate and about growing an e-commerce business, or one of many different forms of business models. And they turn to us as a trusted source to help their clients get access to funding. And we take that very seriously. It's a big honor to us to be tasked with this very important task of getting people access to funding. And go online and take a look at our reviews. You'll see that we have some people ask us, how do you have so many 5-star reviews? And that's because we work that hard for our clients. If you become a client of ours, you're going to see why. We stay in contact with you. We move you forward quickly through the program. We let you know of the pitfalls and hurdles that might stop you, and we navigate around that before you're even slowed down by that. And why? Because we put so many people through the process. This is literally what we're doing all day long. We're putting people through the process, getting them access to funding. We have people in all different industries. We have people that are looking just to buy inventory. We have people that are in the e-commerce industry. They're an Amazon reseller, or they own an Amazon store. Or you have people that need funding, businesses like Fund&Grow, for their social media marketing and their pay-per-click ads. It's called PPC, pay-per-click. That's huge. You know, we could spend upwards of $100,000 a month on pay-per-click ads. this type of funding is perfect for that, and you get cash back on top of it. We have people using it for SEO optimization. You can use it for contractors. If you're a rehabber or a real estate, you run a real estate business and you hire contractors, using business credit cards is perfect, because guess what? Let's say that you're flipping a house and you need to put a new roof on it, and you decide to use a local roofing contractor. And so you take your business credit card and you pay for the roof. Now let's say, God forbid, that the roofing company doesn't follow up and get the roof certified under the inspection of the county. Let's say that they don't get it fully certified. So now it's falling on you. It's red tagged. It's red tagged on you. You can't sell your house because this contractor didn't finish the roof. What can you do about that? How do you, who do you complain to if the roofer didn't finish? The roofer's saying, well, you need to get it to pass the inspection. And you're like, what are you talking about? I paid you to install the roof. You need to make sure it passes the inspection. Clearly but see, the question is, obviously the roofer should do it. But what happens when you're dealing with a contractor that's very busy and they're a little bit, not as honest as they should be, which there's a lot of those contractors out there. Guess what? When you're using a business credit card, you can call the credit card company and you can reverse the charge. You call the company, you do a chargeback. You charge back on the roof cost. Let's say you spent 10, 15 grand on that roof and you put it on your business credit card. You're gonna call American Express, Bank of America, whoever the business card is, and you're gonna do a chargeback. They're gonna suck that money out of the roofing company's bank account and put it into your bank account. And guess who's gonna be calling you to finish the roof? They're gonna be calling you to finish the roof. I've done exactly this before, guys. I've had to use this chargeback procedure for a number of different contractors that didn't want to fit. I had a security contractor with cameras that I had to charge back on $36,000, and I got all $36,000 back. And it's shocking to have to do that, especially considering that we had already done a $100,000 job with them for our main office, and they had installed all of our cameras perfectly. Everything was great, and we're using the same contractor to do another office, and they completely screw up and drop the ball. It's absolutely shocking, but the great thing was we used a business credit card. We were able to get every dollar back. And we didn't even have to go through a lengthy process. We didn't have to, call up our state senator and, ask the president. All we had to do was call the credit card company and charge back. And that's what we want to put. We want to put you guys in the driver's seat the same way that we are, in terms of when you're dealing with a contractor, that you can stay in charge. Now, I promised everyone that I was going to teach you how to pull cash off your credit card. Here we are. So Plastic, this is a wonderful service that we recommend to our clients to be able to use to pull cash off your card. So you can pay virtually anything that you need by using Plastic. So let's say that you have your business credit card from Fund&Grow, and you want to spend it with a company that does not accept credit card. Well, you go to Plastic, and you run your card through Plastic, and Plastic either sends a check, an ACH, or a wire transfer. We have clients that will go into their Plastic account, and they will add, 3, 4, 5 different credit cards to their Plastic account. They could add Chase, B of A, U.S. Bank, and each one of these has a different limit. And so what they do is they then use this to aggregate it together and to wire it out to an escrow account, so that you can pay, you can buy real estate, you can buy whatever you need to buy using a business credit card, even if it's traditionally not easy to do. And there's another one, guys. It's called Melio Payments. So Melio Payments is another service exactly like Plastic. And there's other ones too, guys. You just run your credit card, they send a wire. You run your credit card, they send a wire. Now, with both of these services, it's about 2.8%, 2.85% to do the wire. So when you're doing the wire, it's 2.8. But remember, you don't have to use Plastic. You can just go and spend your card. You do not have to wire or send an ACH or send a check. You don't have to do that. So you don't have to use this if you don't want to have that 2.8% cost in terms of sending a wire. So let's talk for a minute about another client of ours who is a wholesaler. So Nick Perry is not only an affiliate of ours, but he's also a client. And he's now over $553,000 of this type of funding. And he's built his company from 40,000 to over 400,000. And I'm pretty sure, I'm not sure if that's his monthly or his yearly revenue, because at one point he had told us that he had gone from 40,000 per month to 400,000 per month. Now, when you look at this, you might say, well, this is his third time returning. Why is he only at 550? Shouldn't it be 750 if we're talking about 250,000 for each membership, right? Well, what we are doing here is we're keeping the credit at 0%, like we talked about. So this 553, some of it's been recycled from previous memberships, but we're keeping it at a 0% interest rate. That is absolutely huge, folks. So this is one of the things that we do. And if you guys want to see this full interview, go to our YouTube channel and you can check it out. But keeping the 0% at a low interest rate is literally what we do. And so if you want to get access to this type of funding, go ahead and get started. And the link is fundingspecial.com, www.fundingspecial.com. Now, we also have people standing by on the phone. So if you would like to call us, and if you, let's say you got one last question, you got your credit card out, you're ready to sign up, call us at 800-996-0270. Now, if you got a lot of questions, today might not be the best day, because today is going to be a very, very busy day for our sales team. The phones have already been ringing off the hook, and so if you're going to get onto a long call and ask them a million questions, they're probably going to get, schedule a call with you in the future, because we have so many people that are just getting ready to get started right now. But if you're ready to get started and you want one of our salespeople to call you to step you through the process and do it over the phone, and you have your credit card out, the number is 1-800-996-0270. Now, if you have questions, send through your questions now. I want to get into answering some questions. So let's see. It looks like we've had quite a few questions come in so far. Awesome. And give me a second, guys. I'm just getting my my panel open here. Okay, so Mary's asking, how does the second applicant add-on work? Mary, all you have to do is go ahead and get started, and then you'll be able to add the second in. So if you get started and there's a place in there for a secondary, then you got in there. So all you have to do is purchase. As soon as you've purchased, log in, and you'll see if it says primary and secondary, then you got the buy one, get one offer. That secondary slot is going to show up in there for the life of your membership. You can add them now. You can add them a month from now. You could add them 6 months from now. It makes no difference. The secondary place is going to be in your membership. When you purchase it and buy, and you get the buy one, get one today, it'll show up inside the client portal. Let me know if I answer your question on that. So yes, Mary, it's 12 months for you and your secondary. So Justin's asking, should each, excuse me. Justin's asking, should each credit card be at 35%, or should your total credit card utilization be at 35%? Which is the best? Now, it's best, Justin, if you're able to have each individual card be at the 35%. And the reason for that is because let's say that you have 50,000 of available credit, but that's split up over multiple cards. If the whole 50,000 is below 35%, then you'll be good. And it'll be a little bit more work for our negotiators to explain that to the underwriter. But if we could balance that 35% on each of the given credit cards so that it's not only less than 35% in the total amount of available credit cards that you have, but it's also on each individual card less than 35%, which would simply maybe mean doing a few balance transfers to split it up, then that's generally the best way to go. But as long as you can bring it down to the 35 for the total, then we'll be good to go. So Scott's asking, I have 2 seasoned LLCs. Do I need to get the partner price, or do I get to use 2 businesses on the same membership for more than $250K? And Scott, the answer is you can use multiple businesses within the membership. but it's not the business that's going to get you a huge amount extra. The business will get you some extra, but the personal guarantor having good credit is the main thing. Now, the personal guarantor is not going to show up on their credit report, but you do have to have good personal credit if you want to get the larger amounts. So then Terrence is asking 30 to 45 days, including business formation, seasoning, etc. And it's actually more like 2 to 3 weeks. But yes, 30 to 45 days includes setting up the entity, because again, as a sole proprietor, we're able to build in the years of seasoning to match your industry experience. So that makes it very, very easy. And I would like to just remind people, for anyone getting on the call now, how the process works. So once you first get started, we're going to look through all of your information. Then we're going to help you become more lendable by looking at all of the different stats on your report and running our magic. And we've just spent an hour talking about all that. I don't want to get all back into that. Then we're going to apply and negotiate for you. This is where the major magic happens. After that, we show you how to utilize the funding and remove inquiries, which brings us back to step number 1, and we start the whole process over again of getting you access to funding. So actually that's not right. We actually just go back to this step number 2. And then that way, you're just going right back into applications. And then this is what that looks like. So here's a client that has gone through their first batch. So on their first batch, as you can see, their American Express card got declined. But then we got it overturned to a $10,000 approval by calling in, talking to the underwriter, explaining to them the business and what they do. We got it approval. Then we applied for Ameris Bank. We got declined. This is even after we did our amazing client positioning. We positioned the client perfectly, still got declined. And then we called in to the underwriter using our relationships and got a $25,000 approval. Then on Bank of America, we got a $15,000 approval. We called in and we weren't able to negotiate it above that, and so the $15,000 stuck. Then with Chase, we got declined, and then we called in, got it overturned to a very specific amount of $34,500, which is kind of common actually to get these weird numbers, because the underwriter's looking at it and they're basing it off the percentages of what your income is, your credit, your utilization, and that's how they come up with those strange looking numbers. Then we have American Express, again, declined, and then we got it overturned to a $16,800. Now notice that how we're able to sneak in this extra Amex card here. So we know the process. We were able to apply for this one just a few days before the rest of these. We have a very strategic process, and that was able to add on an additional $16,000. This client would have gotten less than $100,000 without using that specific strategy. So we were able to get him extra funding from the same institution. So American Express offers a variety of different types of cards, and all of the different banks do this. They all offer a variety of different cards. So you really need, if you know what you're doing within these institutions, you can get access to a lot of funding that doesn't appear on your personal credit report. A lot of people are just going pell-mell, and then it's all showing up on their personal credit report. You don't want it to show up on your personal credit report. But let me give you an example of a client going through multiple batches. So here we have a client who went through their first batch, and then they went through their second batch. So batch number 1, and then batch number 2. So these are 2 different batches of the credit card stacking process, and if you add it all together, they were able to generate a total of $122,000 on those 2 batches. So that's pretty awesome. $122,000 on 2 batches. Now this client actually has a bit of a gap between those 2 batches, and the reason that something like that would happen is because the client literally is asking us, hey, slow down, I don't know what to do with all the funding. So you might not be that client. You might say, what are you talking about? Give me all the funding you can get. And we have a lot of clients like that. But we also have clients that may not be into the same thing that you are. They might have a different model, and they're looking for a different amount of funding. They don't have the same need, and so they have a gap in between when we would go back, because they didn't want us to go back yet. So, and I want to remind everyone that if you don't have access to your credit report, you can go to fundandgrowcreditservices.com. Fundandgrowcreditservices.com. Cheapest credit monitoring on the internet. Cheapest, but but when I say cheapest, it's also high quality because it gives you access to everything. You want access to everything. So for $15.95 a month, you get access to real-time credit alerts and unlimited access to all 3 bureaus. So many credit monitoring sites only give you access to 1 bureau. This gives you access to all 3 bureaus for a tri-merge credit report. Now, what happens if my credit is not there? What if I don't have good enough credit? Do you want me to start with Fund&Grow? And the answer is no. We don't want you to sign up with Fund&Grow if your credit isn't good. So if you don't have good credit, what we need you to do is we need you to first work on your personal credit. Now, we can help people with their personal credit, but that's through a partner company. That's through a company called Kadem Credit. Kadem Credit is an amazing company. They've been helping people with build their personal credit profiles back for over 15 years now. And they're an amazing company. I personally have used them. Many people within Fund&Grow have used them. They're the exclusive company that we use for funding. We have an ownership within that company. We 100% know that when we send clients to Kadem, they're going to come back to us for funding. We send them to Kadem for credit repair, they'll actually come back to us for funding. With other companies that we've worked with, we send them for credit repair, and they don't come back for funding. It just takes on, it stretches on and on and on and on and on. It's like washing your car by driving in the rain. That's what a lot of these credit repair companies are, where they're just sending letters. They just send letters out. And Kadem doesn't do that. Kadem actually has this really unique multi-channel dispute method. And what this is most of these companies, they only dispute by sending out a letter. But what they taught me was that there's actually 4 ways of disputing with the bureaus. You can do an internet online dispute. You can send a dispute through the fax. You can send a dispute through the mail. And you can verbally call in and talk to them and initiate a dispute. 4 different ways of doing it, 4 different departments, 4 different outcomes. And this is one of the things that we use. When we're sending our clients to Kadem, this is one of the things that Kadem does to help our clients. If they have sent a letter and they couldn't get that derogatory off, they're not going to send a letter the second time. They're going to go online and do an internet dispute. They're going to switch gears and interact with the geeks in the tech department rather than sending in a letter. And if that doesn't work, they'll send in a fax. And again, that's it's like you're switching gears. You're dealing with people in a different department. And with what one department says no, another might just say yes. We have the most insane experiences with clients just calling and talking directly to the credit bureaus, where you just call and talk to them, and suddenly you're talking to a nice guy, you're explaining the situation, they're like, all right, I'll delete that off your report. They're like, what? And they just delete it off the report. So when you call in and you speak to a representative, they have the ability to delete things right off your report. And I'm talking about when you call it Equifax, Experian, or TransUnion. This is what Kadem will do. They'll call the credit bureau. They will send a fax to the credit bureau. They will do an online dispute. And then they will also do what everyone else does, which is the mail disputes. So if you're not getting any traction, getting items deleted off your credit report, take a page out of these guys' book and start doing that multi-channel dispute process. So you can use the funding for virtually anything. There is no money police that's going to come and ask you, what did you spend the funding on? Now, of course, I don't recommend going to Walmart and buying flat screen TVs, but I do recommend spending it in your business, spending it on your investments, on what you're investing in, whatever it is where you have the expertise and you have the skill and you understand that model. So if you already have access to business credit, that doesn't preclude you from getting access to more business credit. You guys remember Nick? Nick Perry's up to $550,000. And let me ask you a question. Is your existing business credit at 0%? We're going to get that switched over to 0%. So will the balances on my business cards hurt my credit score? And the answer is no. The balances on your business credit cards will not count against your personal credit. That's why we're doing this. We want to use personal, or we do not want to use personal, we only want to use business. So sometimes some of the questions that we get is people are saying, hey, on your website it says that the cost of your program is $4,000. And that is the cost of our program. Today, on this special, if you go to fundingspecial.com, then you'll be able to get the discount, the Black Friday special discount, which is $700 off. So $700 off. I don't know if that's being covered up by the thing. So what happens when my membership expires? So when your membership expires, obviously you can sign up again, and you can continue to utilize our services like Nick Perry and many other clients, but we're not going to leave you hanging. So if, let's say that you're on month 12, literally on the last month of the membership, and you ask us to do another batch, no problem, we'll do another batch. Even on month 13, we'll do that. So we have no problem servicing our clients. We're here to serve you. We're here to help you. We're here to build you. This is not Shark Tank funding. We're not here to harpoon you. So who can I use as a secondary applicant? You can use any adult that's willing to work with you. You can use your adult children. You can use a brother and a sister. You can use a mother or father. You can use a business partner. You can use any adult that's willing to work with you that has good credit. They can be your secondary applicant. Fund&Grow will help you find who that applicant could be. So that means sometimes we might have to run their credit and see if they qualify. And even if we have to go through a few people, we'll help you. So if you get started and you get that buy one get one, you get the secondary in your account, then we'll help you. So if you bring us your brother and we run their credit, and it's not good, and you're like, oh shoot. So then you talk to your business partner and they happen to have good credit, and we'll run it and we'll determine that, and we'll help you find out of your friends and family and the people that you're working with who that secondary could be. So what are the payment plans? So we have a 3-pay, a 2-pay, and a 1-pay. What does that mean? It means that you could take our payment, which for today is $32.97, and you could pay this in 3 payments, or you could pay it in 2 payments. Now, when you pay it in 3 and 2 payments, you're adding on a little bit of a finance charge. So the cheapest cost today is just to buy the full membership at $32.97. Because obviously, if you look at the price, let's see. So if you look at the $12.66, this times 3 is more than $32.97. So if you want to use the payment plans, that's fine, but there is a bit of a financing charge. So let's go ahead and look at this next client. And this one looks very much like the last one that we looked at. Oh, but it's different. That's 101. So here we go. We got 2 different clients. So these clients here, as you can see, again, the same thing. They got denied on when we applied, they got denied on all the initial approvals. But look, overturned to 25, overturned to 25, overturned to 8,000, overturned to 44,000. And all of this money can be used to buy anything that your business needs. And it's 0%, and it doesn't show up on the client's credit report. It's huge. This particular client was using an LLC as their company structure. So here we have a client that's using a sole proprietor. So look what this client got with the sole proprietor. They got $90,000 with this sole proprietor. So on their first batch, a 27, a 7,500, a 10,000, a 21,000. On their second batch, a 5, a 37, and a 15. And this client here is able to go for another batch. This is only 2 batches. Not all clients use all of the batches. So we have a lot of clients that they're not using all the batches. They only want a certain amount of funding. And so that might be you. You might need all 250,000, or you might just need a specific amount. So let's go ahead and pivot back here for a moment and see if we can answer any of these questions. So Scott's asking, what are the minimum monthly payments on the outstanding balance typically? Great question, Scott. So typically, the payment amount is 1% of the balance. Now, 1% of the balance is a bit higher than a mortgage. And when you look at that, it's because you're paying interest in a mortgage. On a mortgage, you're just paying pedal payments. You're like a mouse running on the wheel. When you're using a business credit card, especially when within its 0% introductory period of time, all your money is being applied towards the principal. You're making chunk payments. You're not spinning your wheel, making compounded interest payments. So the great thing about business credit cards is that it's a simple interest versus an annualized compounded interest like a mortgage, for example, where you end up paying, triple the cost of the loan just to pay off the interest over the life of the loan. So with business credit, it's 0% for an introductory period of time for anywhere from 6 to 24 months. The card stacking process allows us to extend out that 0%. There is sometimes the banks are going to make some nickel and dime fees or a little bit of here and there, but to get access to that amount of funding is absolutely is absolutely astounding. So you can get access to a lot of funding and pay very little in any type of overall fee. So, all right, let's see. Zach, do we have any good questions coming in? They're coming in so fast, I don't know which one to choose. So what is the average time for the initial funding? Brian's asking. What's the average time? So generally, if a client qualifies, they're going to receive their funding within 2 to 3 weeks. So if you qualify means if you got good credit. And again, the credit doesn't show up on your personal credit report. But they do want to look at your personal credit and make sure that you have good credit. Now, let's say that you don't qualify. Let's say that you need some work done on your credit. That could add in 30 days because it takes 30 days to update something on your credit report. So let's say that we merge the accounts, that we do the things that we talked about earlier on the webinar, and we need to do some changes on your credit report. Well, it'll take 30 days for that to update. It'll take 30 days for that to show up on the credit report where we can actually go to the bank, apply for you, they run the report, and they see the updates. They see the new stuff. So if you have changes that need made on your report, then you're looking at more like 45 days. So you're more looking at, you want to give us those 30 days, and then you want to give us another half a month in order to start producing so that we can first update your credit report, give us a week to get started, then give the 30 days, then give us another week to do your applications. You're looking at about 45 days. And we would be able to get your funding rolling in. And that's, of course, ideal. That's, of course, that you're picking up the phone every time we call, you're responding every time we email you, and that we're able to move forward expeditiously. But our team here at Fund&Grow is big. So we have about 60, I think we're up to maybe 65 employees now, and we are able to churn out a lot of funding very quickly. We did 26 million last month. We're on track to do 26.5 million this month, hopefully 27 in December, and we're continuing to build that up. We want to hit 30 million monthly as soon as possible and build up to over 2 billion in funding total. So Deborah's asking a question. I have a personal voluntary repossession 6 years ago with no dings, and it's off my report next year. I've been approved for unsecured personal. Also have an Amex corporate card. Is this a good time to work with Fund&Grow? So it looks like if you still have that account on there, Deborah, we're going to need to get that account off. Now, if it's 6 years, something I need to tell you, Deborah. So you're under the impression that this repossession is going to fall off in the 7-year period of time. But what no one has failed to tell you is that it's not going to just fall off in 7 years. Bankruptcies don't just fall off in 10 years. Let me explain. They're legally only allowed to be held on there for 7 years. The bankruptcy is only legally allowed to be on there for 10 years. But the credit bureaus don't have any mechanism where they're like, hey, this has been on Deborah's credit for 7 years, time to delete it. They don't have any such mechanism. They're not going to delete that off your credit ever, Deborah, unless you ask them to. That's what credit repair is asking them to delete it. So it should come off after 7 years if you ask them. They can only legally keep it on there for 7 years, but they have no mechanism in there to go and scrub off everyone's reports that have hit the 7-year or the 10-year mark. That's up to them to say, hey, you're holding this against me. You shouldn't be holding this against me. This has been on there for 7 years. I can get it removed. So that's what disputing is. That's what credit repair is. So you're going to have to get that removed one way or the other, Deborah. And you don't have to take our word for it. We're just telling you, it doesn't have to be a BK. It's any type of negative, a repossession, a unpaid account, a late payment, all of that. It's all exactly the same thing. There can't be negatives on your report when you're going after 0% business funding, guys. There can't be negatives on your report when you're going after 0% business funding. Because if there was, then it wouldn't be legitimate. How are they going to give you 0%? How are they going to give you the cream of the crop funding if you don't have the cream of the crop credit? This type of funding goes along with cream of the crop credit. So if you have good credit, they're going to give you access to that. And Deborah, it seems like your credit is good. You just have to get that one ding from 6 years ago off. If it still shows up on there, they're going to see it, and then that kills the 0%. they're not going to give you those lucrative introductory offers. They're going to say, Deborah, you qualify for this other product of ours, and it starts at 7% interest. All right. So Brian says, what is the minimum trade lines to qualify if no negatives? Can you get funded with 2 credit cards, $5,000 each, and under 30% on each, and some different student loans? Now, it's kind of hard to tell, Brian, without looking at it in black and white. Just like an attorney, we need to see this in black and white. We need to see it on paper in order to fully advise you. But based on what you're saying, you've already been approved for $10,000 on personal credit cards, and what we need to do now is build out an array of accounts so that you have a more rock-solid personal profile. So in your case, we might shift gears from our normal strategy and apply for some more personal credit cards to give you a bigger array, a larger array, which will give you a more rock-solid personal credit rating, which will allow us to eventually go after business credit. In the meantime, we would help you with the non-recourse corporate funding, which is not based off of your personal credit. All right, so let's see. Zach, do we have any more good ones coming in? All right, guys, I'm just clicking around. If you have any good questions, send them in now. I'm sorry that, all right, so Charlene, what about charge-offs? So yeah, if you have a charge-off, you definitely need to get that, removed. And by the way, that credit repair company I mentioned is one that can get that removed. Zach, could you go ahead and send that link out to everyone? So we're gonna go ahead and send the credit repair link. It looks like some people could use, it would be helpful for them to have access to that. So what if I need to pay some credit cards down, but my husband is in a better credit situation? Can he get started, or do we need to start together? Okay, so this is a perfect example of someone who can use the secondary option. So your husband, we can get started with your husband ASAP, and then help you move your whatever balances you have over to the business side. So that, see, there's sometimes we don't even need to pay off what's on the personal. We can just move it over to the business side. Now, I don't know if that's possible with your situation, Mary, but if your husband qualifies right away, of course we could move forward with your husband. Once the credit cards come in your husband's name, you can use those to pay off, to bring yours down to 35%, and then you can move forward and apply on yours. Because when you're doing a buy one, get one, if you get started today and you get access to 2 people on the program, then remember, we're doing 2 card stacking programs. We're doing for partner A and for partner B. So partner A is going to be going through card stacking and doing applications and batches and negotiations, and then partner B is going to be doing the same thing. So that you really are able to open up, to unlock, to double the amount coming in when using a partner. So Chris says, I have 714 with some outstanding balances, about 7K. I'm good to go with Fund&Grow. Yeah, 714 is a entry-level score with us. And I would need to know, okay, so Chris says no negatives holding it down. So, so the outstanding balance is about 7,000. Is that 7,000 putting you below the 35% limit on any card, Chris? Because if it's not, then it's not going to be a problem. If it is, then we might need to do some redistribution. Aging and balance. Close overall to 30%, then you are good to go, Chris. Can I get a link to a recording of this webinar? I came late, unfortunately, and missed the first part. Yes, you can actually go onto our YouTube, and you will be able to see the video on YouTube, but you're only going to be able to get the special price today. So Noel asks, am I able to take or use the funds for holding costs of real estate, like paying for utilities, mortgage, etc.? If so, how? Absolutely, Noel. Many mortgage companies allow you to pay your mortgage payment with a credit card. I don't know if that's what you're saying, or if you're talking about perhaps the utilization of plastic, which is a service that people use to directly put funding into their escrow accounts. So I'm not sure if you were here for this part of the presentation, but when you're using plastic, you're able to take your business credit card and you're able to run your business credit card through this service, and they will send a wire to your escrow account. They will send an ACH if you need to pay someone, or they will send a check. So this service is if you want to use your business credit card with a company that does not accept credit card, you can pay them by check. You can pay them by ACH or by wire. And so with real estate, and when using an escrow account, you're going to want to send a wire. And so Plastic and Melio Payments, so there's another one called Melio Payments, M-E-L-I-O Payments. And you guys can check that out. And all of these services, and there's other ones too, what they allow you to do is they allow you to use the credit card wherever, however you would like. All right. So Terrence says, confirmation, the 35% balance only applies to revolving credit. It does not include mortgage balances. That is correct. So Terrence is asking a very good question. He's saying, this 35% balance thing that you're talking about, Ari, does it apply to mortgages? What does it apply to? And Terrence is 100% correct. It only applies to credit cards. So if you have a mortgage, your mortgage doesn't have to be at 35%. If you have an auto loan, your auto loan doesn't have to be at 35%. If you have a boat loan, your boat loan doesn't have to be at 35%. If you have a student loan, it doesn't have to be at 35%. The only thing that has to be at 35% is credit cards. The credit cards on your personal credit report. That's the only thing that has to be at 35%. All right, yeah, we'll get whoever's asking for that link for the YouTube video. We'll get that to you. All right, so Chris, that sounds good. Circle back with us. So Sash is saying this is the only thing keeping me right now. What is the thing keeping? Oh, so I have a business, 8 months old, don't have a business credit card yet, but have had to use my 2 personal credit cards to purchase my inventory, costs, etc., as I was declined the business loan I applied for since my revenue was projected. How can this work for me without running my personal credit score since my cards are almost maxed? Well, the banks do want to see your cards at 35%, and Sash, this is the problem. When you go and you run up your personal credit cards, your personal accounts, you bring your scores down. Your scores go down so low, you're not going to get approved for anything. That's why it's paramount that we get the credit set up on your on your business, not on your personal. So once we have the credit set up on your business, then you'll be able to use it for whatever you want. So these accounts here, they're 0% for 22 months, 18 months, 12 months. You know, these accounts here, they're not going to show up on your personal report. You can use all of this without any of it appearing on your personal credit report, and it's not going to bring it down at all. So that way you can use funding, and even if they're maxed, it's not going to pull your scores down. So in your specific instance, Sash, do you have a credit partner you could work with? Because if you had a credit partner, or we could get funding to come into the credit partner's name, you could chip away at the funding that you're holding on your personal. In other words, you could use the business credit to pay off your personal credit. In other words, move it over to the business side of your entity. Then your scores will go up. You could apply and get business credit and even pay off your partner. So Sash, right now, if you get started, you'll get 2 memberships. So for you and for a partner. So if you're married, if you have adult children that work with you in your business, if you have a business partner that works with you, if you have a friend that works with you, all of them can be used as your secondary to temporarily hold some debt, as long as they trust you, of course, to pay down yours. And they will end up walking away with all this credit. So what do they get paid out of this? They're going to get funding. They're going to get access to credit. It's not like you're planning on not paying back, anything that you use for your partner. So let me know if that would work for you, Sash. So Noel's asking, sorry I tuned in late. So after 12 months, membership expires, but we can use a secondary applicant that this member includes after my... So Noel, after your membership expires, you would buy a new membership. So that way you could continue using the 0%. Now, after you've gone through the membership for the first time, you're going to have access to the $250,000. You're going to have access to the credit cards. If you want to get them back on 0% and keep building that above 250, then you can sign up for a second year. So Mac is saying, I had 740 credit score 2 months ago. However, I applied for 10 personal credit cards with 5 approvals for $25,000. Ouch. However, the inquiries pushed my credit score down and over 35 utilization on the balance. My credit score is now under 640 due to this. So guys, let's all learn from Mac here. You don't want to go and try to do what Fund&Grow does with all personal credit cards. The same thing that happened to Mac is going to happen to you. He had a 740 score, now he has a 640, and he only got $25,000. 25,000. If this had been done right, he could have got maybe 50, 70, 80, 100, and I'm just using kind of low numbers to be honest. Like he could have gotten a lot more. With a 740 credit score, he probably would have gotten 80,000 plus on the business side. On the business side. So you could have used the 80,000 and it wouldn't pull your scores down so we can continue the card stacking process. So, yeah, Mac, you're going to have to wait for the seasoning on those cards. And you could get signed up with us and we can put your membership on hold. That way we can still advise you. And we do that. If someone starts with us and we see that they're going to need to season their credit for 3 months or 4 months, whatever, we put the membership on hold. If you're not using up our time, we're not going to charge you for those 3-4 months. We put the membership on hold. So many people's membership ends up being 14, 15, 16, 17 months because there's a waiting period and we put it on hold. We're not going to use up, we're not going to burn your membership months if you need to wait for seasoning on a particular item. So we want to get you you want to get what the maximum amount you can out of that. So okay, so no adult children, no business partner, husband is business owner but doesn't want to be included. My credit score is higher than his. I was thinking maybe doing a consolidation to get my debt down and pay that monthly. Okay, I'm slightly confused as to the whole situation, Sash, but it sounds like that should work for you. So, and another thing, if you want, call the number on the screen, 800-996-0270. We have people standing by, and they can go in more depth and look at this. Obviously, you're very interested in the program. We're going to take our time to explain it to you. We're going to take our time to look at your credit. They can even do a pre-qualification on you. If you want a pre-qualification, guys, then call 800-996-0270. They can run a pre-qualification on you. As a soft inquiry, it won't count against your credit. They can do a soft pre-qualification and tell you what you qualify for immediately. So call 800-996-0270. All right, so Justin's asking, do personal loans count against you or are they in the classification with mortgages? So a personal loan is in the categorization with mortgages. So a personal loan has its own collateral, it has its own agreements. It's separate from a credit card. Credit cards are their own animal. And so when you're looking at a credit card, all the credit card banks require the 35% ratio in conjunction specifically with credit cards. All right. So Terrence is saying, I'm no longer a W-2 employee as of 10/30/22. Can you still help me? 780 credit score plus, 3 cash loan properties yet to form. Terrence, absolutely. Absolutely. You with a 780 score, you're going to have absolutely no problem with the program. You're going to be on the higher side of approvals. So Rashun is asking, what if you don't have the tax returns for the last 2 years? Should we still apply to Fund&Grow? Now, that's a great question because as we mentioned in the beginning of the call, there is no tax return requirements. Now, in no way do we recommend our clients to be disingenuous. We will not tell the bank anything other than your actual income. We're not going to lie. We have to be honest with the bank. But the banks don't require you to show your tax returns for this type of funding. So that's beautiful. You don't have to produce your tax returns or an SS4, or I'm sorry, the income verification document that goes along with proving your tax returns. None of that is required for business credit cards. All right. Yep, and you are so welcome. Thank you guys for coming and asking your questions. Does anyone else have any questions? It looks like they're slowing down. I think I've gotten a lot of these answered. If I didn't answer it over the webinar, you'll notice that our team is answering it through the questions. So we've gotten a lot of everyone's questions answered, but if we missed something, come to the questions area and let us know that we missed it, because I want to make sure that everyone's question gets answered. So do we get the corporate credit package with this, or where do we get that information? So as soon as you purchase the Fund and Grow program, you immediately get access to both programs, the corporate credit and the business credit. The business credit is the cash credit cards. The corporate credit is a non-recourse funding. Awesome. Awesome. So we went over the client journey. Here we are, some client examples. So if anyone doesn't know where their credit is at, because I see a lot of people are saying that they're going to check their credit. And so that's fine to go check your credit, guys, but you can check your credit at fundandgrowcreditservices.com. You want to make sure that you're using a credit monitoring service that's going to give you an accurate reading. And so fundandgrowcreditservices.com, $15.95 a month. You let us know if you find one cheaper. Let us know if you find a credit monitoring place cheaper than ours. And when I say cheaper, I'm not talking about the reports. It's a full tri-merge, all 3 credit bureaus, and you get unlimited access to the reports. All right. Brian's asking, so if needed, you will do personal credit card stacking. Is that included in the price? And Brian, the answer is yes. So in the instance that a client needs to build their personal, we can do credit card stacking on their personal. In fact, there's even other loans that we can get that we haven't talked about on the call that are specific to a client in a situation where they need to build a better profile. So we run into that like 20, 30% of the time. It's actually not that unheard of, Brian. Quite a few clients are receiving personal credit card stacking and other personal loans just in order to get a more rounded out personal profile, to get a better rock solid profile to be able to move forward on the business funding. So if you have limited exposures on your personal credit, then they're unable to determine your credit score properly. So if you have more exposures, more accounts, more trade lines, then of course you're gonna have a more robust profile. Will I be told what cards are being applied for, or will you guys just choose for me and apply? So we are going to let the client know which cards we're applying for. Now, and of course, because remember, most of the time we've already looked through this. We already know what cards are going to help you the most. We already know. But there are some instances where a client will come and tell us, like, listen, I had an auto loan for my kid from Chase, and then my kid didn't pay it, and now Chase hates me, and they sent a guy out to my house, and so, okay, all right, we're not going to apply at Chase for you. So if you have any of those situations, then let us know. But for the most part, we're not going to run into that. In fact, there's instances where someone thought, we had clients who thought they couldn't work together with certain banks, and then we applied for them, and we used our relationships, and we got them approved. And now this whole new bank is opened up to them, and they can get funding there, and it becomes a whole new line item. Imagine that was $27,000 that you're able to get that you didn't have before. That would be huge, or even just $21,000. Any given bank is another lender to be able to bring more money to bear against, for what we're doing here. So if it's real estate, we need all the funding we can get. Even if you're a regular brick and mortar, you're running a hair salon, you're running a pizza shop, you're doing a e-commerce business, drop shipping, it doesn't matter what you're doing. You want access to funding at the lowest interest rate possible. And you want it to be safe. Using a home equity loan puts your family home at risk. Mortgaging your home to invest in your company puts your family at risk. And especially if you haven't paid for your kids' college yet. You really got to think about that. So you want to use the safest form of funding that you can possibly get. So can you please compare Plastic Melio with PayPal, which may have less fees? So PayPal is completely different. So PayPal is not a payment service that would work in the same way. In fact, many people that have used PayPal will tell you to steer clear altogether in terms of collecting payments. If you're a very small merchant and you have like a little jewelry store or jewelry kiosk at the mall, and you do $300 a day or less, then PayPal might work. But when you're trying to pull $10, $15, $20, $50, $100,000 off you're going to need to use the payment services. You're going to need to use Melio and PayPal. They are specifically set up with the banks to do that. They're approved to do exactly that. With PayPal, you would kind of be playing the system against itself, and you don't want to do that because PayPal is going to shut down your card, or I'm sorry, they're going to take, they'll hold on to the money temporarily. They'll make you wait 6 months to receive it back. Your lender, whoever the credit card is, they may be notified by PayPal. PayPal might get upset and notify them. So when you use Melio or Plastic, then what you're doing is you're using a payment service that has permission to run your credit card and to send a check, or to run the credit card and send a wire. They have permission for that. They're allowed to do that. PayPal is not set up for that. PayPal is meant for the accepted usage guidelines that PayPal allows you to do. So if you use PayPal in this context, it's not going to work. So you want to use Melio or Plastic. But it's a good question, and especially if you're trying to save money, it's a good question. But what you're going to find is that your money is going to get held. Again, unless you're just only doing small amounts. So if I'm buying a secondary home that will also be used as short-term rental and using my personal credit to qualify, will I be able to use the funds that are on a business name for down payment? So that's a bit of a convoluted way of thinking about it, but that's exactly, that's a yes. So the question here is, when I get access to business funds, can I spend those business funds on a property? And the answer is absolutely yes. We have clients that are doing that all day long. And they're using things like Plastic to do that. So let's see. They're doing things like Plastic because with Plastic you can send a wire to an escrow account, and with Melio you can send a wire to an escrow account, and so you can use the credit card to buy a property. It's pretty cool. We have a lot of clients that will use credit cards to buy properties, and we have a lot of clients that live in areas where the properties are so expensive that they're using the credit cards to flip, to do rehabs, to buy a roof, to buy supplies, for all of their incidentals, and then when they sell the house, they pay off all the credit cards, they pay off everything. So in some areas, people use the business credit cards to pay for rehabs and to do that type of things. In other areas, like if you're living in an area where real estate is a lot less expensive, then there's actually people buying properties literally using the credit cards. Or they're wiring in cash while also wiring in money from their credit cards. If they have a shortfall and they don't have enough money, they can use some of the business credit because it's basically just funding that your business has access to. So you'll be allowed to wire it to your escrow account. You can prove it. You're a business and investment company that buys real estate. This credit card was approved for your real estate company. You're wiring money off that to buy property in the name of your entity. So this is a beautiful and great way of being able to do that. And we have lots of clients that are doing that, and they have a great. It's an easy process to do that with Melio and with Plastic. Just like anything, there's paperwork you got to go through. You got to get the account set up. It's like setting up a new bank account. You have to log in there. You have to set it up. You have to add your credit cards. Once the credit cards are added, they then have to verify them. Once they're verified, you can then do the ACH, the wire, or send a check. It's cheapest to send a check. They charge you the least fee to send a check. Then they charge you the highest fee for a wire. But even the highest fee is 2.85%. Not that bad. That's pretty good, guys. So, all right. Do we have any more questions coming in? I want to get to everyone's question. I want to make sure that everyone's question has been answered. And for Gordon was just asking, it is fundingspecial.com. Gordon, go to www.fundingspecial.com. And on there is where you'll see the purchase page, and you'll see that you can get started for $12.66. And again, that's 3 payments of $12.66. And so this is the least expensive option to start with. You get access to the entire program. Or you could pay the full payment of $32.97, which is actually the least expensive way of starting. So if you pay 3 payments of $12.66, that's more costly. I think that's around, what, $4,000? as opposed to $32.97. Now, you're still getting a discount nonetheless, because if you were to buy our normal program, it's going to be $700 more expensive if you add in the 3 payments. So no matter what payment plan you're buying on today, it is way cheaper than if you were to go and buy the 3 payments on the front of our website right now, because it would be 3 payments at $4,500. So it would total $4,500. It would be like $1,333, I believe, is what it would be. 3 payments of $1,333 as opposed to $1,266. So let's see if we have any more questions. So Charlene is asking, the installment agreement plans would show up on my credit, right? No, this is just you paying us. This is not going to show up on your credit. This is you paying us for the program. And that's not going to appear on your credit at all. What would show up on your credit is if we applied for a personal credit card for you. And so if you need that, then that would show up. But Charlene, what we do is business credit accounts. So the business credit is not going to show up on your personal. The only time anything would show up on your personal is if you request, if you have a lower personal credit score and you need to build a more robust personal profile, then we would have something show up on there. So Charlene, let me know if I answered your question right. I might have gotten a little too far in depth for what you were asking. So if I get started for $1,266 and have credit good enough and can get funding fast, can I use business credit for the other membership payments? And absolutely, we have many clients doing that. They get started and they pay either the first payment or just the first 2 payments in the schedule, and then by that time, by either the second payment or after the first payment, we have funding rolling in. If the client has good credit, they have funding rolling in, and then they can pay the second or the third payments using the funding. So on 3 payments, it's possible that after you pay the first one, we already have funding rolling in before the second payment's even due. But I can't guarantee that. It might take a little longer, and it might just be that you use the funding to pay off the third payment. So I hope I'm being, yeah, she said, yes, it makes sense. Oh, that was for the previous question. All right, well, hopefully that also made sense. So guys, come to the questions area and let us know if you have any questions, okay? Don't be shy. Don't be shy. I want to answer your question right now. Come to the area, come to the questions area, let us know, leave a comment. I want to answer your guys' questions because sometimes people have a question that they think is silly, where they don't fully understand how this could help them. And we don't want you to be in a position where your business is going to suffer because you're scared to move forward. Let me find that area of the webinar. But there is situations where people don't move forward because they're just worried. So their business suffers. They think that they're not going to get approved. They think that it's not going to work for them. They think that they need a lot of time for us to get you the funding, or they have some reason of someone who won't let them do it. Don't let your business suffer, guys. Don't do it. We want to build you the funding. We've built over $1.4 billion of funding for over 30,000 clients, and these are all very reputable loans that are with major institutions such as you can see here, Bank of America, American Express, Chase, Discover, Truist. You know, all of these are major banking institutions that all offer the 0%. It could be anywhere from 6 months all the way up to as much as 24 months at 0% that we've seen. And so we want to do this for your business. So Justin says, I have a question. What is corporate funding? Is that in a corporate card form as well? So now that's a good question. So let's go ahead and get to that. So we're going to go ahead and get to the corporate funding real quick for Justin. So Justin, the corporate funding is going to come in a variety of different ways. For me, it came in like this. For me, I buy properties using the non-recourse funding. We also buy things like office supplies and there's equipment that we can rent. All of these different things, that's all non-recourse. We can literally get company vehicles that are non-recourse. In other words, not based on me personally. I'm not personally guaranteeing it. They're not looking at my personal credit report. They're only looking at the business credit report. So with corporate funding, the first things that you get access to is things like Uline, Quill, places like Home Depot, Amazon, Lowe's, and these are things that you can get access to that it may not be cash. That's not cash that you can buy a property with, but the funding you get here you can use to flip a house with Home Depot. You can use it, I'm sorry, to rehab a house, I apologize. You can buy materials from Lowe's to use to rehab a house. There's a lot of people that are buying things such as electrical fixtures, wire, things off of Amazon because it's so much cheaper than freaking out of Home Depot. And they have other forms of wire and things that are just cheaper, where especially if you're working on a rehab or a rental and this isn't like your family home, you know, you might not want to use, you know, all the Turkish most expensive stuff. You might just want to buy the stuff on Amazon and watch your bottom line and actually turn a profit. So corporate funding is absolutely huge. This is us right here. We're in this building right here. We're in here. And we actually just built something onto the front of the building, so now we have an even bigger entryway going into the front of the building. But all of that was bought on non-recourse credit. So Byron's asking, is it okay if I get credit as a real estate business, but I use some of it to work on other projects? So Byron, once you get funding to come in your business's name, your business can spend that on whatever your business does. If your business is a real estate company, but you market your real estate company, then you would obviously need to spend the credit on marketing. Even though you're a business, even though you're a property or a real estate company. So a real estate company has to pay for employees. They have to pay payroll. What does payroll have to do with real estate? Well, because that's all part and parcel to your company. So the answer is yes. So how can we purchase this program using a personal credit card, or you're applying for a business credit account to purchase? So no, yes, you just use your personal credit card. You can either use a debit card, and then that way you're not putting any type of balance on any of your credit cards, or you could buy our service on a credit card that has less than, that when you put our payment, it won't put you over the 35%. A BK Chapter 13 filed in 2017 that was dismissed will affect the regular time frame for funding in 2017. So yeah, you're going to need to, on the Chapter 13, you're going to want to dispute that to get that removed off your report. Oh, good. So Sash said she called in and she got some good advice and on what is recommended. Awesome. So, and Charlene, no, you don't need to get an LLC established first, Charlene. No, you do not. We've already talked about that. We can actually, we will help you with that with the sole proprietor, and we can also help you with an LLC. But the important thing is that we use an entity that will get you the maximum amount of funding, so for maximum lendability. So does corporate funding get into things like auto lending brands, GMAC, etc.? And the answer is yes. That's exactly what. You can go to some of those dealerships and they're going to run your corporate credit to determine whether or not they will, what type of loan they'll give you. You could do a personal loan, you could do a business loan, you could do a corporate loan, and many dealerships are going to have, they're going to be able to sell you vehicles directly using corporate credit. And there are certain lenders that specialize in financing vehicles using this type of credit. So once you have that, once you have access to that type of credit through having good credit, then you can utilize those types of lenders. Oh, and guys, don't forget about the cash back. This cash back is huge. Look at the amount of cash back we're getting. $5,600, $5,600, $4,800, $4,600, $5,900. And this is just regular payments that we're getting, guys. We have to spend $100,000, $200,000 a month. Why not get $5,000 back every month? Like, I mean, what the heck? Get your 1.5% back. This is what everyone should be doing. And you're probably spending a lot more than you realize. There's so many things that you don't have to spend out of your business bank account or out of your personal bank account that you can switch to a business credit card or to a credit card where you get cash back. So if you're doing that, then you get 1.5% cash back on pretty much everything that you're buying. You might as well do that. So maybe this question should be for, let's see. So we have someone who's asking a question. They want to know if their idea is something that's frowned upon in the industry or possibly illegal. And what they're asking is not. So I'm going to go ahead and read it out loud. So I have been thinking of starting a consulting partnership company with specialist consultants in their own areas, having their own sole proprietor companies. They borrow with the help of Fund&Grow and then turn around and lend those funds to the consulting partnership. Is that in any way illegal? The answer is no. It's called a note loan. You can do a note loan in between any entity. And that's the legal way of doing it, is by creating the note loan, by having a documentation of the paperwork. That's what makes it legal. If the partnership then invests the funds. So yes, it's not a problem. I know you cannot provide legal or tax info, just discuss the idea, please. So that is absolutely something you can do. In fact, we have clients that are doing that because their main operating business is not lendable. So what they do is they set up a sole proprietor as a business management company. And this business management sole proprietor actually manages their operating company. They use it as a management entity. And the management entity is a lot more lendable. So they take the management entity, they get the funds to the management entity, and then they do a note loan to the main operating entity, because the operating entity isn't as lendable in this scenario. So let me know if you got any questions on that. But that's something that happens quite commonly. You're welcome. That's something that happens quite commonly. And we have a lot of clients that do it. Not for the exact reason why you're doing it, mainly because their main operating entity isn't as lendable. But your idea is a great idea. You could create a network. What makes it legal is your legal agreements. A note loan is a legal agreement. And if you're really concerned about it, you get it notarized. And then that way it's 100% officiated. So let's go ahead and look at more questions coming in, guys. Now's a great time to ask any questions that you might have. That we work together with a lot of national speakers, guys. So we work together, like if you check out Lucilia Chow, she's an awesome real estate educator. I mean, a lot of these guys on here are. Scott Myers teaches people how to do self-storage investing. Matt Andrews runs a family mastermind that we're part of. And it's just an amazing organization. We have Clayton Morris from Redacted. You guys, you got to check out Clayton Morris's show on Redacted. It's on YouTube. Just type in Redacted. And Clayton and his wife Natalie have this show called Redacted, and it is a powerhouse show. I highly recommend that everybody goes and checks out Redacted. And like I mentioned earlier, we love working with like NerdWallet. NerdWallet is huge. NerdWallet, also known as Fundera, they send hundreds and hundreds of clients to us. And these guys have a loan matching service. So people are coming to them trying to find loan matches, and they're matching them to us in order to get them access to the bigger aggregates, the bigger amounts of funding. And so that's one of the ways we work with NerdWallet. Same, very similar style with banks.com. Yeah, and if you guys have any further questions, go ahead, send them through. These are the bonuses that people are going to get for getting started today. So these two bonuses, the premium coaching bonus, the first month is free. You get access to the entire premium coaching program, which gives you access to all of our past issues and articles and our online premium coaching sessions where we go over different aspects of building a business, from things like how to generate more sales. For example, how Fund&Grow does millions of dollars in sales a month, how we generate millions of dollars in funding, 26 million last month in funding, how we service our clients, how do we retain unhappy clients. We go over all of these aspects to building a business, how Fund&Grow did it, how you can do it. So we not only provide funding, but we also help with the grow part. This is the grow part, and that is our premium coaching. And we do that to help our client businesses be able to grow, to be able to do millions of dollars in revenue every month, to be able to bring in millions of dollars of sales, to be able to grow their companies in a real meaningful way and not just a slow snail's pace. So the second bonus is the partner upgrade, which is a buy one, get one. So we've talked about that a few times. That's how people are adding a secondary. If you've heard people asking about a secondary, that's what they're talking about. They're talking about using the buy one, get one offer. And so just as a quick recap before I close down, what we're going to provide for everyone who's gotten started so far, and I can see we've got a lot of people have gotten started. Let's see. I want to go ahead and welcome Terrence to the program, and David, and Deborah, and Brian, and Alejandro, and Jennifer, and Brian, and William, and Remy, and Travis, and Ryan, and Anthony, and Eduardo, and Saeed, and Thomas, Joshua, Jermaine, Chavala, Malik, Chi, Walters, Aaron, Natanya, Toya, Joseph, and the list goes on and on, guys. I would keep on reading names here for quite some time, but we want to welcome all of you to the program, and we're honored that you would put your trust in us. We're going to work very hard to generate you hundreds of thousands of dollars in funding, millions of dollars for all of the people who just signed up, and we're super excited to be serving you as a team. So here in front of you, you can see this is our team standing in front of our building, and we're super excited to be working with you. We want to thank everyone that's gotten started with us. If you're watching this on YouTube, go ahead and subscribe to our channel and give us a thumbs up if you liked it, and leave some comments. Let us know what you thought of the webinar. So thank you all for joining us. If you have any final questions, call them in to 1-800-996-0270. And one last time, the website to get started, which still has the discount live, is www.fundingspecial.com. Fundingspecial.com. And the phone number is 1-800-996-0270. Right now, there's people that are available to talk to you. So if you have any last questions, get your credit card out, call in, and we will go ahead and get you started getting access to funding. So thank you, everyone, for joining me today. This is Ari Page signing off.